Welcome to Industry Focus. Today is Tuesday, March 2nd, and I'm your host, Emily Flippen. Today, I am joined by Motley Fool analyst Yasser El-Shimy as we talk about one of the hottest fashion stocks on the market today, Farfetch. Yasser, thanks so much for joining. I think this is your first time on Industry Focus, is that right?
That is right, Emily. And honestly, it feels a bit surreal. I've been a longtime fan of yours and of the show itself. I still remember a few years ago just walking my dog down the street, listening to David Gardner grill you over Etsy's market cap. And I remember, like at that time, I had an epiphany. I was like, I really want to do this. This is, I love this. So here I am now, and very much looking forward to it.
It's funny you mentioned that because for anybody who's listening who doesn't know about the Rule Breaker Investing podcast from David Gardner, the Motley Fool's co-founder, one of his regular segments is what he calls the Market Cap Game Show, where he pulls a few analysts on and essentially has them quiz over the market caps of various companies. And I have been on it a number of times, also embarrassed myself a number of times. In particular, I think the worst one was guessing the market cap of America. And it was a company I had never heard of before. David gave me a hint and said they own U-Haul, so they're the U-Haulers, and I think I guessed a market cap of something like $50 billion for America, and I guess I really overestimated how many people needed U-Hauls because that's dramatically off. So a little bit of a spoiler there, but if you're not a listener of that podcast, I definitely encourage all of our listeners on Industry Focus to also tune in for that. But I've gone off on a tangent here. Before we get into Farfetch, Yasser, I'm sure a lot of our listeners will want to hear about your story. You kind of went from podcast listener and now you're full-fledged analyst, but there's a lot of stuff that happened in between there. So tell us about yourself a little bit.
Sure, I'd be happy to. I'm born and raised in Cairo, Egypt, actually. That's where I went to school. I learned English in college, and I went to the American University in Cairo there. And then, I moved to the US around 2007 or so to do a PhD in political science. Only after I had been in the US for a year or two did I actually start, getting interested in the whole investing world. If you know anything about like sort of Egyptian culture, Arab culture in general, in stock markets are almost seen as casinos, like you're supposed to avoid them like the plague. So I really kind of went on a limb here by saying, you know what, there might be value actually in doing this, and I started doing it on the side for for a little bit, and I became initially I started with mutual funds and then ETFs. And then I was like, you know what, where's the fun in that? I want to pick my own stocks. So I started educating myself and just bit by bit growing in confidence. And here I am. I basically took me a few years to realize that this is my real passion. And I kind of quit my other career that had been going on at that point, both in policy and academia. And I wanted to dedicate myself full time to finding, great innovative companies with long runways ahead of them. That's what I love to do.
Well, it's truly amazing, and I will say this: it takes guts. It's easy for someone my age. Right? I studied finance. It was kind of just like, okay, that's what I'll naturally do. I mean, you had an entire career and background, and I think a lot of our listeners kind of view investing as a hobby and something they do on the side. And it takes guts to move into it as your full-time career. And I can speak personally from working with you. I think that's been a good decision, at least thus far. And I know when you talk about looking at innovative and interesting companies, the company we're talking about today definitely fits both of those boxes. In fact, you have your own, we'll talk about it at the end of the show, but you have your own checklist for businesses that you like to invest in. And this one scores up pretty well on the shimmy checklist here. So let's just dive right into it. This is a business that kind of correlates to a business that we've talked about before on Industry Focus. Back in December, Asad and I did a show on Revolve Group, which is a smaller competitor of sorts, you could say, to Farfetch. But Farfetch is not only the larger business, but also the relative outperformer. So Farfetch is up something like 500% over the past year versus Revolve's 180% gain. And neither of those are bad. Let's put that out there, right? Nothing to complain complain about if you own either of those businesses. It's definitely more of a testament to the business of luxury e-commerce than anything. But it does mean, obviously, that conversation we're going to have today will be really interesting. But putting that aside, assuming that our listeners are completely new to this industry, what can you tell us about Farfetch and its business?
Well, let me put it this way. If Etsy and Shopify had a baby in a luxury boutique shop, it would be Farfetch. I hope this kind of weird image will make a little more sense as we go through the conversation a little bit. But I think it's very important to kind of move beyond the immediate impression of Farfetch as just another e-retailer of luxury clothing. There's a lot more to the company than that. So Farfetch is the single largest marketplace for luxury retailers, boutiques, and brands. They help sell their products either on the digital platform. So think Etsy, for example. That's kind of the model where you have a marketplace with sellers and customers, or through e-concessions or virtual storefronts. So think again Shopify, how they enable kind of small businesses to develop their own web commerce solutions. And that's kind of what Farfetch also does for some of the world's top brands. It has the largest global, it is in fact the largest global online destination for luxury shopping with 3 million active customers, 1,300 plus luxury sellers, including approximately all of the top 200 brands that exist around the world. Eventually, the company has a vision to become the operating system and a digital enabler for the entire global luxury industry, both online and offline. So, the company is working on developing a suite of tech-powered back-end and front-end solutions to help retailers and brands alike, from marketing to customer engagement and fulfillment and so on. Now, again, we were talking a lot about sort of some of the third-party stuff that they do, but they also have a first-party retail business, which through which they sell products through their Brown store, as well as a company they acquired a couple of years ago called New Guards Group, which is a brand generation subsidiary of theirs that effectively acts as a new brand incubator and has been actually quite successful for them. And the last thing I'm going to say about their business model is that it generates impressive economics, both in terms of the take rate, which is about 30%. Compare that to Etsy at 17.5, for example, or Shopify at 2.5%. So Farfetch is doing pretty well there. And they have about 35% in order contribution margins. And the best way to kind of, understand what order contribution margin means, it's effectively customer acquisition cost divided by customer lifetime values. So in other words, how valuable is this customer to you after you have spent money to acquire that customer? And that order contribution margin, which is, again, already impressive at 35%, increases to about 55% for mature cohorts. You have an average order value of about $600 per order. And so if you have if you're able to retain these customers, which they have been able to, they keep paying you over time, and basically their lifetime value increases exponentially almost. And that is just one great aspect of their business model that I love.
I think a lot of frequent listeners will have had their minds blown by some of the numbers that you just mentioned. We spend a lot of time talking about these e-retailers, how much money they spend to acquire customers, but more importantly, how much money those customers spend on the platform and what their take rate is. I remember we recently did a show over Poshmark when they filed their S1 to go public, and Poshmark, I think, has an average order value of somewhere around $30, decent take rate, but nowhere near 30%. We're talking about Farfetch being a luxury e-retailer, right? Being on the higher end of that value chain, having an average order value of over $600 and a 30% take rate that increases, right? That as that person retains. So really some crazy numbers there when you think about just how much revenue and cash Farfetch is able to pull in from their customers. And that's what we look for when we talk about consumer goods, but I know you working your way through the analyst development program, which I believe you're about to finish this week. Is that right?
Well, my colleagues are about to finish this week because I just had a newborn. I was allowed to have an extension a little bit, so I'm taking a parental leave, and I should be done by mid to late March.
Well, you should be taking way more time than you are. I completely forgot. Well, first of all, congratulations.
Thank you.
I am now feeling terrible that I even reached out to you to come on this podcast. No, now knowing that you have a newborn at home now. So thank you for
This
taking
is
your
a lot more
time.
fun than changing diapers, so
I'd hope
you're all
so.
good.
Well, one of the things that you're always asked to look at whenever you go through analyst development programs, regardless of whenever you finish, is that the people who are behind the scenes running the show. It's the Buck Hartzell methodology, kind of understanding the management team. So, how do you feel about Farfetch's management team? Do you think they're additive?
I love the Farfetch management team. I specifically love their CEO and co-founder Jose Neves, um, because he's effectively been a veteran of the fashion industry, and he has also dabbled in tech before. So he combined kind of both aspects of being a sort of on the cutting edge of fashion, as well as sort of being very knowledgeable of some of the trends in technology, and was able to kind of thread the needle, if you will, between the fashion industry, the tech world, and the small boutique owners to create Farfetch. He was able to kind of have this radical revolutionary vision that this highly fragmented, highly archaic industry, just a few years back, I would say, was ripe for disruption, and that's exactly what he did by building Farfetch. He kind of created this entirely novel idea of what's called distributed stock, where basically a particular item can be ordered, shipped, and delivered to a customer in another country or continent without Farfetch actually holding or owning too much of that centralized inventory. So he's acting almost like a middleman with impressive take rates, without having that baggage of all the inventories that the usual wholesale retailers kind of end up doing. Companies like My Teresa or Yox Net-a-Porter, or others. So I also like the board of directors. They have some pretty high profile figures over there. They have Victor Lewis, who's the former CEO of Tapestry. They have J. Michael Evans, the former president of Alibaba Group, and Jillian Tans, the former chairwoman of Booking.com, just to name a few. So it's a pretty well stacked management and board team.
Yeah, no
Yeah,
kidding. Got some heavy hitters there.
exactly.
And when you look at its business, you mentioned they have this kind of Etsy like platform, but when you break down their revenue, what's really driving growth? How does the business make money?
Right. So the business is actually, the way they make money is divided across three different ways, three venues, if you will. The first one is the digital platform solutions. That's a kind of marketplace we talk about, similar to Etsy, right? It constitutes about two-thirds of adjusted revenue for the company. So that's by far their cash cow, if you will. And that's, an area that they really generate a lot of resources to. Another part of the business is the brand platform, or e-concessions, virtual storefronts, if you will. So that's kind of the similar to Shopify's model of enabling sort of small businesses to develop their own websites and e-commerce solutions. Farfetch effectively goes to either emerging brands or to um, established brands and tells them, hey, I can build your e-commerce presence in, I don't know, in Saudi Arabia or in Egypt or in Vietnam at no cost to you. So you don't have to invest any money and expect a return on invested capital of a certain amount, and take that risk. So enabling that e-commerce ability for those brands has been very valuable to the brands, but also highly accretive to Farfetch itself. And then finally, by far the smallest fragment of their revenue is the in-store purchases. So they own a couple of venues here. They have the Brown store, and they also have pop-up stores for their Off-White brand, which is again part of the New Guards Group subsidiary that we talked about earlier. I'm happy also to talk about their geographic breakdown of revenue, if you'd like, because that's also kind of impressive by itself. If you look at sort of how it's divided, it's almost evenly distributed across three segments: the Americas, Europe, Middle East, and Africa, Asia Pacific. Now, Europe, Middle East, and Africa is the highest so far. America is the lowest, but one should expect the Americas to eventually catch up with that group once they dedicate a little bit more resources. And I'm relying here, by the way, on figures from 2019 because that's the latest 20F that they have actually produced. We're waiting for their new one any day now. But the thing is, Asia Pacific has been almost on the same level as Europe, Middle East, and Africa, at almost 1/3 of revenue. And yet, China has actually been a really, really small part of that, which means that the opportunity there is still huge once they actually dedicate some resources towards developing that opportunity, which they are doing.
It's funny you mentioned China because when you talk about the brand platform aspect, so these aren't sales that are happening directly, right? It's not that 30-50% take rate. It's the brand building out in foreign countries that they're doing for the brands that they own. It reminds me of a Chinese company that has been such a laggard in my portfolio. I would imagine not too many of our listeners are familiar with it. The company is Baozun. The ticker's BZUN. It was my first ever stock pitch here at the Fool. I did my undergrad in China. I was really excited by its prospects, and it was an interesting business because in addition to having this distribution business, which they've since kind of spun out, they've actually focused on building out foreign brands in China. So they would approach or be approached by brands like Nike or Lululemon who wanted to sell in China, wanted to have their own brand commerce, but didn't have the resources or the strategy to build out in these foreign countries. And the idea that a business could come in and kind of offer a one-stop shop for providing those solutions really attracted me to Baozun. It's been a mismanaged business, though, so it's not fair for me to compare Farfetch to Baozun. In fact, Baozun has kind of lost out because they weren't able to get those really premium and expensive brands that I would imagine are way more attractive to be on a Farfetch-like platform, to have Farfetch as a partnership with. So it'll be fun to watch them try to build that out in China. I believe in the business model, and I think that even without China, EMEA, the Europe, Middle East, Africa region, has been such an impressive foothold for them that they probably don't even need China to be successful, maybe to justify today's valuation, but to be a successful business, they could probably fail in China and still be perfectly fine. But I, in particular, am really looking forward to see what happens with their expansion into China. But China aside, when you look at the luxury e-commerce industry, clearly more attractive than the industry that Baozun was going after. But when you look at that industry, what excites you, or what attracts you to investing in the space?
So you're asking exactly the right question, Emily. I'm excited about e-luxury, but not luxury itself. Now, the luxury industry has historically been rife with inefficiencies, segmentation, big egos, brutal seasonality and shifts of taste. So, like, I would never, for example, I had never invested in any particular luxury brand, mainly because, tastes change over time, and what might be fashionable this year might not be next year, and sales are, highly cyclical in that respect. So, what I like about e-luxury is that you don't actually have to choose which style you're going year. You're effectively capturing everything, no matter what the brand in vogue is at this particular moment. So putting that aside, a rising share of spending on luxury products has started to move online. So we're starting to see a secular shift here of luxury shoppers who have traditionally opted to spend all of their money in store to actually start spending some money online. and we have other trends also that are working in favor of e-luxury, including the fact that millions of people in China, India, and elsewhere are joining the ranks of upper middle class or upper class, and they're going to add to that cohort of luxury shoppers out there. Additionally, millennials are increasingly developing, a taste for luxury these days, and they are more likely, obviously, to do much of their shopping online than some of the older generations. Now, all of these combine to create tailwinds for luxury e-commerce in general, and I believe Farfetch, as the single biggest platform in that industry, stands to benefit tremendously over time.
And I know the industry, because it is attractive for all the reasons that you just mentioned, it also is increasingly competitive. I mentioned we talked about Revolve Group, but there are a number of other companies that I'm going to have a trouble naming. I mean, Ukes, Net-a-Porter. I mean, these are businesses I can't even imagine spending that much money buying luxury goods online. But the point is, demand has clearly been there, that a lot of competitors have entered into the space. What can you tell us about the competition and what sets potentially Farfetch apart?
Sure. Well, Emily, if you're in the market for a $30,000 sheepskin coat, I can definitely direct you to Farfetch.
A dare to
Uh,
dream.
I have personally, so as much as I love the company, and it has been, one of my favorite holdings in my portfolio, and also I pitched it as part of the investor development program. I have never made a purchase on Farfetch, and for a reason. I'm not part of that cohort of people who are buying those kinds of high ticket items. However, I think it's, when we talk about the competitive landscape for Farfetch, it's important to keep in mind that it is the only scaled luxury marketplace. So if we put it another way, there is no one else that's actually competing with Farfetch on that scale. The competitors are likely to be one of three groups. The first one is online brand e-commerce. So Prada.com or anybrand.com, basically, if you're buying direct from from that brand. The other competitor would be the omni-channel multi-brand wholesalers. Think Saks Fifth Avenue, for example, either in store or their website. And finally, online multi-brand retailers like Yoox Net-a-Porter or My Theresa. Now, these competitors effectively have no scale, either globally or technologically, to offer all the things Farfetch offers both to its customers and brand and retailer partners. So Farfetch, for example, operates in around 200 countries around the world, and can ship and do logistics and all of that in 200 countries around the world. None of these companies can do that. Additionally, the amount of products that are available in Farfetch and the diversity of brands is just unmatched. Nothing comes close. I believe it's something like 12 times the number of brands that are available on Yoox Net-a-Porter, which is its second biggest competitor in that space. And let me add one more thing. 80% of items listed on the platform are exclusive to Farfetch. Now, that doesn't mean that they're not selling anywhere else. It means that the only online marketplace that they're selling is on Farfetch, as well as the brand website itself. So, if you want to find the highest diversity of items, Farfetch is definitely going to be your bet.
And it might be worth pointing out, I know this is a question that a lot of listeners may be asking themselves because, at least on Industry Focus, we spend a lot of time covering resellers. The issue of fake goods isn't really a concern for Farfetch the way that it can be with some of their other competitors that are focused on resale, because these are direct from the brand. So you're talking about the actual producers themselves partnering with Farfetch, listing their products. You're not talking about people the way that you were, say, Poshmark, where somebody buys an expensive suit or whatever from a brand and then looks to resell it. So worth clarifying to our listeners that as you're thinking about Farfetch's business, and you think about luxury goods in general, having the issue with fake goods, a little bit less of a concern for a business like Farfetch, because they do go direct to source, and again helps prop up that $600 average order value as a price point. And before we move on here, I do want to get to your special checklist. That's my favorite part of what we have planned for today's episode. I think everybody should have a special checklist. I don't have one yet, but I think everybody should. What do you think about Farfetch's competitive advantage? I know that you like a lot of different things about the business, but boiling down what makes Farfetch special, what stands out to you?
Sure. I mean, if we have all day, I'll go on, but I'm gonna try and be quick here and just speed through sort of some of the aspects I think make Farfetch stand out from the competition. So the first competitive advantage in my mind is the fact that Farfetch has been an aggregator of a fragmented industry. They have the highest collection of brands, including most of the top 200 global brands, and as well as the highest product selection within these brands than any other e-commerce platform. Secondly, Farfetch does enjoy a pretty strong brand image that some of its competitors, like wholesalers, use closed stores like the Real Real or the Everything store that's Amazon, which is now trying to get into luxury, are gonna struggle with. Luxury shoppers are very much brand focused, and when you buy a luxury item, it's often a function of emotion. So, you don't want to be going to Amazon to do that. That's not really what it's for. Farfetch plays that card very, very well compared to others. A third competitive advantage in my mind is their business model, which is inventory light. So the company is rarely stuck with unsold inventory and can quickly and nimbly offer the latest fashion items, both through their own label and through the brand storefronts or e-concessions. And 52% of their gross merchandise volume is third party, just to keep that in context. Unlike, retailers and wholesalers who effectively own the entire inventory and then have to sell it and often engage in highly competitive promotional behavior that presses down their margins, especially over time. Now, Farfetch also enjoys network effects. It has 3 million active customers and 1,300 plus luxury sellers. And so basically, the sellers want to be where the customers are, and that's Farfetch. And the customers want to be where the sellers and brands are, and that's, again, Farfetch. So the network effects really work to their favor there. Farfetch is also omni-channel. So it gives the shoppers the option to either pick up in store or to have the item delivered to them at their home. So, and the interesting part here is that Farfetch is actually able to glance through the data that their sort of boutique and retailer partners generate offline. So when your Farfetch customer goes to pick up an item from these stores and decides to, I don't know, maybe go for those extra pair of shoes that are on display there, Farfetch gets to know exactly what the customer ordered on the spot, and therefore is able to custom tailor their offering to that customer in the future based on their shopping preferences, both online and offline. So that's pretty special to me. Farfetch is also an end-to-end platform. Again, it's not just a retailer or a website. It actually helps brands and boutiques and retailers with everything from marketing to logistics to back office or back end operations. So, it develops a whole solution that basically takes the pain for most of these partners out of the equation. And that's something that no other company is offering them, perhaps with maybe the exception of Shopify, but Shopify does not have a marketplace. They also, give brands control over pricing and visual appearance, which other competitors don't. So if you are a brand, if you're a top 10 brand, let's say you're a Montclair or you're Gucci or Versace or, one of those top 10 brands, you want to make sure that your item, when it goes on sale on a third-party platform, that it's not discounted, right? Or you have this kind of, because once your items get discounted, that kind of reflects negatively on the brand itself. So by giving control over pricing to the brands themselves, that takes, that gives the brand that much control and gives, Farfetch itself a competitive advantage over other retailers. I don't know, I could go on and on, but One more thing I'm going to say here is that Farfetch is truly global. So they have multilingual websites. They partner with local stores in whatever country, and over 90% of transactions on the platform are cross-border. So that's incredible. And recently, they've also been really, I mentioned China before, they've been really paying attention to the Chinese opportunity here. They have recently announced joint ventures with Alibaba and Richemont to basically launch on the Tmall luxury marketplace in China. And that, again, remains to be a big opportunity for them, and they stand to benefit tremendously. And I'm happy to talk more about sort of their active customer growth and all of these things if we have time, but I'll stop here.
And there's a lot to like, and I would encourage any of our listeners who weren't convinced, not that you could not be convinced by what you just said, but that aren't convinced that Farfetch's experience is differentiated. Spend a little bit of time poking around on Farfetch's website. Switch your location if you have a VPN or something. Switch your language up, and you can really get that sense about what a global business Farfetch is. They really are focused on the highest tiers, the most expensive products to the most luxury demanding countries across the world, which, hey, believe it or not, for our American listeners, it's not the United States. So if you've never heard of this business, if you're comparing it in your mind to, say, The Real Real, to Poshmark, to Etsy, well, those are all great businesses and they're all interesting in their own respects. None of them really paint out quite the holistic picture that Farfetch has created, just becoming that end-to-end platform for everything luxury.
And Emily, if I can jump in here, just since you brought up The Real Real, one thing that has often been said, well, Farfetch has just benefited from the fact that everybody has been under lockdown. People can't go to their luxury stores, and that's why sort of you're seeing sales increase. But the fact of the matter is, Farfetch has been increasing their active customers by 50% year over year, while rates of active customer growth are actually declining for other platforms like The Real Real. So there's actually a kind of a tale of two cities here. And that speaks volumes about sort of the attractiveness of the Farfetch platform compared to others, as well as sort of the fact that it may be, we just might be on the precipice of them kind of like taking off in a sort of a secular direction.
Yeah, I'm laughing to myself because you say it so kindly. You compare it to The Real Real. Look, Farfetch is growing users. Real Real is losing users. They're not just growing customers. Their active customer growth was something like 50% year over year. I mean, that's massive customer expansion, and that's not purely as a result of the pandemic. This is a business that was growing pre-pandemic, so I love that comparison. You're very diplomatic about the comparison there. The Real Real is a great company, but Farfetch, I think that's just, again, a level of differentiation that we're seeing in the Farfetch platform that you don't quite have with their competitors. But I really buried the lead here. I really want to get to your checklist. I know you have your own kind of special formula, if we can call it that. You affectionately call it the shimmy checklist here, about what you look for when building out your own personal portfolio. I know this is a company that you own individually in your portfolio, so I'm excited to see. Tell us, what's your checklist and how does Farfetch rank up?
Well, let's hope this checklist becomes as famous as Jason Moser's war on Cash Basket. I told him he should receive royalties for that, by the way, but he never did, so he's too kind. My checklist is effectively a list of features I like to see in any business in which, I plan to invest. The first of these is the vision. Is that company's vision radical? That's a good thing if it is. For me, radical, disruptive, revolutionary, that's good. But it also has to be credible, right? So it has to be achievable, not some pie in the sky, vision of making everyone around the world a happier person. That might be a good goal to have, but I don't know how realistic it is. So for Farfetch becoming sort of as I said before, like the operating system of the luxury industry around the world, that's a radical, vision to have, yet I believe it is possible. And so I'll give them a pass on that. The second item I check for is high and sustained revenue growth. And Farfetch easily passes that mark. It has had double-digit growth now to the tune of almost 60+% year over year for full fiscal year 2020. And it shows no signs of slowing down necessarily very much. I mean, we were talking about Revolve earlier. Revolve has actually their sales declined by about 3-4% year over year, whereas Farfetch has increased by 60%. So again, that's a pretty good sign. The third item I like to check for is the rundle, or the recurring revenue bundle. Do they actually have a suite of products that they charge other sort of companies to use? Now, Farfetch doesn't quite have that yet, but I believe that they are potentially on their way to doing it in the future as they develop that, as I said before, that suite of end-to-end, services that they can offer to brands and to retailers. The fourth item I check for is standout technology. Does the technology, really stand out from competitors? Is there something special here? I would say they do have some standout technology, particularly in their AI and kind of and data analytics, where they are able to target customers in a very granular level compared to other sort of e-commerce plays in that sector. But again, it's nothing completely unique or inimitable, if you will, inimitable. So I don't give them a complete pass on this. And then I check for global footprint and scalability. Does the company operate globally? Or if it doesn't, can it scale its sales and operations globally if it chooses to? So does the product or the service have global appeal? And in this case, it passes the mark on both. It operates in almost 200 countries and has scaled quite massively over time. Network effects also I check for. So if you're not familiar with network effects, it means that the more your platform grows, the better it gets. The more buyers you have, the more sellers you're going to have, and the more sellers you have, the more buyers you're going to have. And so there's a virtuous cycle there. I also check for the total addressable market. Does the company have a really sizable total addressable market ahead? And some of the most conservative estimates would put that TAM for Fetch around $300 billion, but it could potentially rise to $350 billion per year.
Man, that's a lot of money
That
spent
is
on
a lot of money,
luxury
and Farfetch
goods.
is at less than 1% of that opportunity. So the runway is still, not, no pun intended. The runway is still quite long here. And finally, I check for high switching costs. In this case, maybe for customers, the switching costs are not particularly strong because maybe it doesn't cost you that much if you went directly to Prada.com as opposed to Farfetch. But for suppliers and brands and retailers, the switching costs are quite high because if you lose that channel, you're effectively losing a massive audience all around the globe who could become potential customers, and you're ceding that ground to competitors. And that's why you find even the most reluctant of the most exclusive brands, most recently Moncler, decided to go on the Farfetch platform because they simply could not afford not to be on it. So from that perspective, for the brands, there are significant high switching costs here. Farfetch meets 6 out of those 8 on my checklist, and my philosophy is I'll invest in any company that passes 5 out of these 8, or at least I'll consider investing. Farfetch, I believe, has earned its place in my portfolio.
Clearly one that you're a big fan of. So this last question feels a little silly to ask, but it's probably important because with every investment, even when it ranks a 6 out of 8 on the Shimmy checklist, there are things that can kill the investment thesis. So as we wrap up here, when you think about the risks that come with owning Farfetch, what 1 or 2 things really stand out to you as things that would be thesis breakers for your investment?
Mm. So thesis breakers, I think probably the most dangerous development, if you will, that could happen to Farfetch is if China doesn't pan out. If they are so, 2 days ago they had a soft launch of the Farfetch sort of platform on Tmall's luxury pavilion. Now, again, the valuation is lofty at this point, and the stock has run up tremendously over the past few months and year. So, if Farfetch cannot break into the Chinese market, I think a lot of people are going to kind of reconsider the valuation and potentially re-rate the valuation on the company down. So this is a threat to the stock, not so much to the business. The business will continue to be just fine, whether or not China succeeds. Um, there's also another question that kind of weighs on my mind, which is, do luxury consumers really want to do the bulk of their shopping online? It used to be that if you're going to spend a few $1,000s on an item, you probably want to go into that luxury boutique or brand store, get the VIP treatment, be hidden from public view, sort of be given a glass of champagne, and really pampered, and just have that kind of experience as you're placing that order. So I think we really want to look out as to how well does Farfetch do post-pandemic, and if it's able to maintain kind of the customer engagement on the platform, kind of as it has been doing so far. There are other risks to the business, including bigger competitors kind of muscling into the space. We've had Amazon now trying for at least over a year to break into the luxury fashion e-commerce market, to little success, it seems. But that was honestly to be expected. Just the Amazon brand does not really translate into luxury shopping. So, I think it's not as big a threat as some of the analysts have made it out to be at the time. And finally, I'll say a word of caution here. This talk has not been for the faint of heart. If you're a fan of roller coasters, you're a fan of Farfetch stock. This stock was as low as $8 just in October of 2019, and was as high as $70+ just a couple of weeks ago. It has been an immense volatile ride, and I do not see a reason why it would stop being volatile, at least in the medium or short term. So, if you're in for this kind of explosive growth, and you can see that exponential opportunity ahead, you just have to buckle up for the ride.
And nothing drives that point home more than seeing that Farfetch, the day that we're taping this on the 3rd or 2nd, March 2nd, is down something like 10% on virtually no news. This is the volatility that you get with a lot of these high flyers. So I hope that does kind of, really drive that point home for our listeners. But Yasser, thank you so much for joining me today. Not only did you bring just a ton of research and clearly a ton of knowledge about Farfetch, but you did it, and I forgot, you have a newborn at home. So I can't thank you enough for taking your time out of your day, not only to come on the show, but to come on, answer our questions, and prep. I mean, a lot of work went into this, and this is my formal apology, but also formal thank you for joining.
Well, thank you, Emily. It's really my pleasure to be here, and I love being with you.
Listeners, that does it for this episode of Industry Focus. If you have any questions or just want to reach out, you can shoot us an email at industryfocus@fool.com or tweet at us at MFIndustryFocus. As always, people on the program may own companies discussed on the show, and the Motley Fool may have formal recommendations for or against any stocks mentioned. So don't buy or sell anything based solely on what you hear. Thanks to Tim Sparks for his work behind the screen today. For Yasser El-Shimy, I'm Emily Flippen. Thanks for listening, and Fool on!